Our next guest says a Fed rate cut of any kind will only happen if there's a major economic downturn and inflation suddenly drops under 2%. Joining us now is Shana Sissel, President and CEO at Banríon Capital Management. So Shana, before we even get to next year and any potential rate cuts that might be on the horizon, what do you anticipate this week out of the CPI and what it might mean for the Fed rate path?
Well, we saw a slight uptick in CPI in August. But I would anticipate it to be relatively flat in September. The year-over-year number isn't as extreme as it was over the summer. And so I think you're going to see it be flat. I don't expect it to see a major downturn. And I think as a result, the Fed will likely pause in September as they wait to see what happens with the data through the month of September and the hopes that they'll see inflation tick down as we've seen some weakness in the job market.
Well, we certainly heard Janet Yellen tell us en route back from the G20 that she's still confident in her prediction for no recession, a soft landing essentially, and not that much damage to the labour market. If that plays out, at least for the rest of this year, does that pose any kind of a threat to equities, or do you see any situation where we might have a rout in equities?
Well, I think she's being overly optimistic, to be honest. You can't increase interest rates and have inflation even start to come down to the levels it has, never mind get down to the Fed target of 2%, and not see that impact economic growth. We're starting to see it in some of the outlook as we listen to earnings calls. But technology earnings have been stronger. We've actually seen analysts increase their earning estimates. I just don't think that necessarily the macro environment will impact stocks that much. But I do think if you just look at valuations in general, they're pretty stretched at this point. Even with the slight increase we've seen in earnings estimates, we're still looking at 12% earnings growth over the next year in the S&P. And if you had at 1 to 2% inflation and a multiple of about 18.5, that only gives you an S&P 500 of about 4,600. And that's not a lot of upside from here. I think it's far more likely that we have downside from here. So I think she's being overly optimistic. I think we're seeing cracks in the employment markets. We're starting to see stress in the consumer. And I think we will see some slowdown in the economy. Will we see a massive recession? I don't think so. But the longer it takes to see any sort of slowdown, I'm becoming more and more concerned, because that emboldens the Fed to continue to increase interest rates, which is much more likely to push us into a much deeper recession.
Now, we're up 16% on the S&P for the year, even in spite of a little drop in September so far. So is now the time where you would say, look, the NVIDIA effect has happened. We're beyond that and we need to maybe make some changes to our portfolio?
Well, the NVIDIA effect is real. It's actually buoyed up a lot of technology stocks that maybe don't justify being up the way that they are. NVIDIA certainly does, but the rest is kind of rising tides lifts all ships. We're starting to see some change in leadership. We're seeing energy stocks start to outperform. In fact, since July, energy as a sector has outperformed all other sectors of the S&P 500 by about 900 basis points. It's also the only sector in the small cap indices that has seen a new cycle high. So we're starting to see change in leadership. There's actually more weakness in discretionary and technology than there has been. And that, I think, is what you're talking about, the end of the NVIDIA effect, meaning the end of one company impacting an entire sector and what the market thinks is going to do.
Shana, thank you for your time today. Pleasure to speak with you as always. Shana Sissel is President and CEO at Banríon Capital Management.